Okay, now we move to last part of recording transaction in T account, which is how to record expenses in T account. Okay, what is expenses? Normally, in process of generating a sales, to generate a sales, the business may use up services such as a rent. Business need to pay a business insurance, need to pay for the advertising expenses, need to pay up the salaries. Business need to pay utility expenses such as electricity, watering bill, and telephone bill, and all of these services are part of operating expenses of the business. In summary, expenses include all items incurred in the process of earning revenue or sales, so that expenses is actually decrease the owner's equity and should record in a debit side. Due to large volume of expenses transaction, it is a practice to keep a separate account for expenses, so that all the expenses account should record in a debit side in the T account. Okay, let's look at example 1. The transaction for example 1 is when a business paid salaries by cash, RM 5,000. So that how to record this transaction in our business T account? So first step, you identify the account affected from this transaction, so that it is a salaries account and also a cash account. So which account need to be debited and which account need to be credited, so that as we paid means we use our business cash to pay salaries to a business employee, so it is reduces our cash account. Remember, cash account is one of the asset account. Reducing in asset account should record in a credit side. So another account which is a salaries account. What is the salaries account? As I explained before, salaries account is the expenses account. Since the expenses account reducing the owner's equity, so when reducing the owner's equity, we should record in a debit side. So our salary account should be debited. Now we record this transaction in T account. We have two accounts that we agree before, which is the salaries and also a cash account. Okay, cash reduced by 5,000 because we paid salaries by cash. So we record in a credit side of 5,000. Cash reduced because of payment of salaries. Don't forget to identify the debit and credit. So now our salaries is the expenses account. This is one of expenses account, and expenses is always reduce the owner's equity so that it always record in a debit side. So our salaries account 5,000, okay, incurred of the salaries because we paid a salaries by cash. So now we fulfill our double entry concept. Okay, let's look the example number 2. What happened when business paid utility bill RM 500 by check? So that when we paid using a check means we take our business bank account. We use a business bank account to pay a utility bill. So now identify the two account involved, which is the utility bill account and also our business bank account. Debit will be a utility bill because utility bill is one of expenses account and the expenses reduce the owner's equity, so it always recorded in debit side. Credit will be a bank account because we use or we paid a utility bill using a check, which is it take out from our business bank money. And we record transaction in T account. So that we have two account involved here. Identify your debit and credit for your T account. Each time you record a transaction. So we have a bank and utility. So our bank account reduce. This is our asset account. So reducing in asset account record in a credit side. So that 500 reduce of bank account due to payment of utility, and utility account, which is the expenses account incurred when we paid using our business bank account. So now it is very simple to show on how to record expenses in the T account. Okay, look the last example, which is when business paid insurance RM 200 by check. Okay, the same thing, identify two account involved, which is insurance account and bank account, because we paid using a check. Normally when we paid using a check, this check will be cleared to our bank so that the money go out from our business bank account. So debit will be insurance because insurance is one of expenses account, and also it reduces the owner's equity. So reduces in owner's equity should record in a debit. And we have a credit side of bank because our business bank account reduces when we paid 200. Now we record in T account. As usual, identify the debit and credit. We have an insurance account and also a bank account, so that insurance is always in a debit because it is the expenses account, and also it is one of this is the account that reduces owner's equity, so that it record in a debit side. How much? 200. Okay, the insurance incurred when we paid through our bank account, and our bank account reduced by 200 because of insurance payment. Okay, that's all on how to record the transaction in T account. Okay, last but not least, we look on how to record drawings into a T account. What is drawing is actually? Drawing is when an owner wish to take a goods or cash from a business for his personal use, which means when an owner take out a goods or business cash for his personal use, we need to record this transaction as a drawings. Remember, as we learn a business entity concept, the business is a separate entity with an owner, so that whatever goods or cash that owner want to take out from a business, we record in the T account. We need to record in the T account, so that a separate account is open to record all the drawings. So it is called as a drawings account. Remember, drawings reduces owner's equity, which means drawing being recorded as a debit side. Okay, and you should remember that drawing is not a part of expenses account. Drawing is not an expenses account. It is a separate account to record the goods or cash that been taken by an owner for personal use. Let's look example 1. Owner withdrew cash RM 200 for personal use, so that you know that owner take out the business money, which is business cash, worth RM 200 for his personal use. So the account involved in this case is drawings and our business cash account. Which account should be debit and which account should be credit? So you should debited the drawings account, because drawings reduces the owner equity. Whatever reduces the owner equity, it should record in a debit side. For the credit side of account, we record a cash in the credit side. Why? Because now owner take out 200 from a business, so that a business cash reduce. Business cash is one of the asset account. When reduced in the asset account, so we record as a credit side. So now we record in T account. So that we have two accounts involved. One is a cash account. Another one is a drawings account. So that our drawings account been debit by 200 because we take out a business cash for business for a personal use. Now our cash reduced by 200 because of drawings that owner made. Okay. Look at example 2. What happened when owner withdrew goods worth Rm500 for personal use? Okay, now two accounts involved. Owner withdrew goods. Goods is something that business bought to resell to customer. When owner take out the goods from a business, so the drawings involved. Another one is the purchase account. What account that you need to debit and which account you need to credit? We will debit the drawings account because drawings reduces the owner equity, and whatever amount that reduces the owner equity should record in a debit. Credit, we record purchases. Remember, it reduce our purchases. When we bought a goods into the business, our purchases increase because the goods come into the business. When the goods been taken out by the owner for a personal use, so that it reduces the purchase account. So our purchase account will be credited. Now we record in T account. So this is the simple things to record. Follow the same procedure of double entry so that we have a purchases account and we have a drawing account, so that we taken a goods, business, the owner take a goods out from a business, so the drawings we debit by 500 and we take the goods out from business, so it involve a purchase account. So now our purchase account reduce, which means we take a goods from a business out. So purchases reduce by 500 from a drawings that made by an owner.